Real estate is something that everybody has been talking about for a long time, and obviously we know that that's something that's extremely important as far as building wealth and bridging the wealth gap and home equity, and it's a variety. Everybody knows why real estate is good at this point, right? Or can be good, but um, it's some disturbing times that we're living in. Stock market has corrected itself several different times over the last decade. Real estate has never really crashed since 2008. Real
Hmm.
estate prices continue to go up, right? Even when the economy is slowing down, it has no signs of slowing down, or at least fully crashing or pulling back. Um, Even though people are not making as much money year over year, right? It's not like people are making tremendously more money.
Yep.
Inflation is a huge problem. Inflation's been going crazy. Interest rates have been going up. So at a certain point, it becomes hard to justify buying real estate, right? So I want to get your take on. I have my views on this, but I want to let you start the conversation, and then we'll just take it from there.
Yeah. First, thanks for having me on the show, guys. I really appreciate it. I
Of
really
course.
feel as if, look, I always say the same thing: don't buy nothing you can't afford, right? And we are in inflationary times right now. There's no denying that. The store prices are crazy. Anything you look to buy is high right now. Real estate is one of those things that is going to continue to rise, in my opinion, because of simple supply and demand.
Yep.
There's not enough supply out there for even the little bit of demand that's out there right now. And there is still a lot of demand out there in the market, even with interest rates being at 8% right now for a 30-year conventional mortgage. And that's with an excellent credit score of 760, right? So we have this argument. And I saw your post in the comments is just like, I mean, the comments are going crazy, and everybody's going to always have this debate. Well, should you buy? Should you rent? Well, you got to do something. If you rent, you're paying somebody's mortgage regardless. That's just how I look at it. So if you are going to pay somebody's rent, me personally, I'd rather you pay your or pay somebody's mortgage. I'd rather you pay your own mortgage and own the house. Now, obviously, you don't want to buy nothing that you can't afford. But if you can't afford it, I still think you should go out there and buy, but just make sure you're really focusing more on the deal in today's market, not really focused on too much of the interest rate, but you got to focus on the numbers. You got to focus on the deal. You always got to remember real estate is, especially a mortgage, you can always refinance a mortgage if you qualify at
If
some
you
point in the
qualify.
as very important, Ian, if you qualify, right? Because a refinance is not a guarantee. It's not something that you could just walk into the bank and say, hey, rates are 5% right now, refinance my mortgage. No, you still have to go through a qualification process. But you always have to keep that in your back pocket. Today's 7, 8% mortgage rate can easily be 4 or 5% when that market drops. Now, what I would tell everybody who's watching this, and I'll tell you guys this too. What do you think is going to happen when these rates do drop? A year from now, 2 years from now? What do you think is going to happen? Prices
Quality. Yeah.
prices are going to go just like
Yeah.
this.
Go up.
They're going to skyrocket. So I think we're in a position right now, in all honesty, if you do not buy something right now while there is less competition in the market with higher interest rates, you could be priced out even worse than you are today in 2 to 3 years from now. So for me, I'm always going to encourage, especially black and brown people, to go out there and buy real estate because our wealth is trapped in the real estate market.
They say we look like relatives, so I got to ask the question. What do you say to everyone who says you just say that because you're in the real estate industry?
Yeah, I get that all the time too, and I love that, right?
That's the question to be asked.
And it's a fair
Yeah.
question, right? Because people say I'm biased because I'm trying to make a commission. Well, guess what, guys? I'll make more money if the market does crash. So me telling you go out here and buy now, like either which way, it doesn't hurt a true professional like myself, someone who's been in this business for 20 plus years that has a book of business. I know how to make money in any of these type of markets, good market, bad market, left, right. My sole purpose of being on the internet is one to provide leads for my mortgage business, obviously, but two to provide information so that way our people don't get screwed over. And a lot of our people over the past 20, 30 years, 40 years, 50 years have been screwed over in the real estate space because no one has ever taught us how to buy homes. So I'm always going to be biased of home ownership, because not just because it's something that I do for a living, is because I see the benefits as a homeowner of owning your own home. It's nothing better than that.
MG, you talk about 2008, and it's something that you were in the business, right? You were navigating through that. There was a crash. Shadi brought up about that monthly mortgage payment being 52% higher during that crash. At the time, that percentage was 33%, and so we're about 22% higher than that period of time. Is this where we're headed? There's going to be a correction. There's going to be a crash. Obviously, you said you're going to make money either way, but I'm looking at it from the standpoint of the person that was saying yes, you should buy a home. As interest rates go higher, it becomes much harder to put down this 20% down payment. So it's kind of a dilemma, right? The interest rates are going up. I can't afford to it, so I might have to rent, but there might be a price point where I'm getting priced out in the event that there is a crash. There's a dilemma here that I'm not sure people are going to figure out how to navigate through.
So I'm glad you brought up 2008, and a lot of people like to bring that up, right? And try to compare statistics from that era to today. But you also can't forget that the mortgage industry was completely different than what it was today, right?
Yeah.
People, if you had a pulse back then, you can get a mortgage. Now you're getting fully underwritten. So it's a different synopsis, right? Then also you got to look at the inventory from 2007, 2008, 2009. At any given one of those years, you had over 10, 11 months of supply on the market. You had 2 to 4 million foreclosures happening every single year, right? We don't have those type of situations in today's market. So the underlying factors are completely different if you're looking at 2008 housing market compared to 2023 housing market. Is completely different. Now, when you talk about income, people being able, like the inflation times, yeah, this is a completely different story, right? I don't think we've ever been through this at this level in our country where prices have rose this fast just for everything that you're looking to buy, no matter what it is, right? So I guess only time would tell what's really going to happen once that really starts kicking in and really kind of hurting people more than what is hurting them now. But I think, me personally, we're not going to see a huge flux of inventory hit the market because most of the mortgages right now, I think 70% of all mortgages are below 4% interest rate. Those folks are not rushing to sell their
Yeah, they're
property.
not going to sell.
Yeah.
Why would
They're
they?
not gonna sell.
I was going to say, is that the silver lining in all this, right? I was looking at the statistic. It's 80% of the outstanding U.S. mortgage debt is under 5%.
Under 5%, yep.
So that means that you have a large population of people that have a pretty good mortgage rate, and they just are going to sit there and not do anything.
Yeah, but also look at this too. You have 50%, I think it's like 50% of all mortgages have at least 50% of equity in the property too, right? So now you have low rates, top with most of Americans, majority of them have 50, 40, 30% equity in their homes, and home prices are still going up this year, 2 to 4, 5%, just depending on what the market is. No, we're not going to see 20, 25% appreciation year over year like we've seen during the pandemic years, but appreciation is still appreciation regardless. So you have these underlying factors that we didn't have in 2008. Folks didn't have, all of this equity in their homes back in those days. And then again, the most important factor is the qualification of yesterday's borrower compared to today's borrower. Today's borrower is being vetted and being underwritten more thoroughly. There's more rules, there's more regulations to protect the homeowners. There's more modification programs that are out there in today's market that wasn't even in existence until the market crashed, and these programs had to be created to save people from losing their homes. Everybody got to realize the banks are not in the real estate business. They're in the lending business. They don't want to own your home. So they're going to do whatever it takes
BlackRock does,
to
though.
their homes.
If we can have an honest conversation,
Yeah, let's be real.
BlackRock is causing a lot of this inflation and pricing us out of the market. Like, here's an amazing concept. Let me ruin a housing market from 2002 to 2006 with all the ninja loans. The White House has to call me in to fix it, and then all of a sudden I'll change all of the modifications. So now I have a better book of buyers. When I say that I want to be the biggest landlord in the world, I can make sure that those loans are favorable as I'm pricing everybody out.
Yeah, I mean, look at all the institutional investors. They're all killing this market right now. Look at all how they buying properties sight unseen, right?
Yeah.
Look at the Zillows of the world and all these different corporations that were buying all these single families over the past couple of years, even before it started really getting a lot of news play. If you look at even 17, 18, 19, the institutional investors have been buying up real estate for a very long time, driving up prices. It's just now when the rates dropped, everybody started really getting, and the pandemic obviously helped everybody's attention. You ain't got nothing to do, you home, right? You're paying attention now. But this is not nothing new, Ian. Like we all know this. Institutional investors are always going to continue to invest. Their job is to make money, period, point blank. And the housing market is up for grabs. So they're going to continue to invest. And this is why, for me, I don't really see a crash happening. I don't really see, I see a correction still going
A
to
steep
happen,
correction has to happen.
right?
Yeah.
It's definitely, and what goes up has to come down at some
Yeah.
point, right?